Start with the broader risk-off sentiment that we saw in markets the first trading day of the new year market. It felt like a pretty sudden start to the trading year. The Nasdaq losing the most in 2 months. The Magnificent Seven coming under pressure. Do we ask questions about what that tells us about valuation, about rate cut expectations, or do we just put that down to sort of new year jitters?
So the short answer is New Year jitters. Ignore the price action for the first few days. This week, there's still only partial participation, so you never want to read too much into the price action early start of the year. The slight qualifier is it is obviously very understandable to be questioning some of those stretch valuations that we see both in the Magnificent Seven and in the bond market. But I think that's more of a medium-term theme, and I wouldn't think the retracements this week necessarily have traction into the coming weeks.
OK, and thinking about what might give us a reason to pause today, we have Fed minutes, of course, coming up, Mark. What are the risks, given how far we've travelled since the last Fed meeting, given how important it was in either confirming or pivoting the narrative around the Fed? What do you watch for today when it comes to the Fed minutes? Where are the risks?
So I think that the FOMC minutes will be a little bit of an anticlimax. And I better explain that for you because many people think this might be the most exciting one for a while, given the dramatic moves we've seen since the Fed meeting, where everyone is expecting a little bit of pushback from the FOMC minutes to not sound quite as dovish as Powell did in his press conference. But given that that's the expectation, that they'll be not quite as dovish, it would have to be extremely hawkish, an extreme shock to really surprise the market in that direction. And that would be very strange. Why would they deliver such a massive dovish pivot to only unwind it a few weeks later? So that just doesn't seem like a very likely outcome. The other side is that can the minutes be even more dovish than we thought a few weeks ago? Probably not, but they can be a little bit more dovish than the hawkish pushback we're expecting today. I hope I haven't confused people too much with all that mentions of various birds, but I think the general message is that a small bit of hawkishness is expected. I reckon markets will move beyond the FOMC minutes very, very quickly, whichever way it comes. And in fact, today, the bigger mover might be from ISM manufacturing.
OK, interesting. Yeah, don't worry. We're with you on the ornithology, just about keeping up with that. More on ISM perhaps later in the programme. In terms of the Asia session then, obviously read across from the US session of yesterday, but some of our colleagues focusing particularly on weakness in Hong Kong and who it is that's buying and selling in Hong Kong in particular, the lack of international enthusiasm for that theme.
Yes, absolutely. So we actually saw Chinese buyers in Hong Kong yesterday, but they still kind of slumped. And that shows that it's really the negativity from outside the region that continues to hold back Hong Kong stocks from getting any sort of recovery. They are up from the lows a couple of weeks ago. They've not really gone anywhere the last couple of weeks. But you've got to remember, this is with a backdrop of risk assets everywhere else absolutely surging. And even in that environment, Hong Kong stocks are struggling to get any kind of traction for a real bounce.